Hi everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate filings to find the hidden truths. Today we're diving into Steele Capital Corporation's latest report, and let's just say they've been busy behind the scenes, making some quiet moves that might surprise you. So what's the big news here? Steele Capital Corporation on September 2nd of 2025 quietly sold about $100,000 worth of their own company stock. Now this might sound a bit like they're selling off parts of themselves, but there's a bit more to it. They're calling it unregistered sales of equity securities, which is a fancy way of saying they sold stock without making a big song and dance about registering it with the usual authorities for public offerings. And get this, they haven't even finalized the exact number of shares they sold yet. It's all dependent on figuring out the value of their stock at a specific time, which they say they're still working on. This means they'll likely be filing an update to this report later to tell us exactly how many shares were traded and at what price. It's a bit like saying we sold some stuff. We'll tell you exactly what and for how much later. Now why can they do this without a big public registration? They're leaning on something called Section 4 Act 2 of the Securities Act of 1933 and a rule called Regulation D. Think of it as a special pass that allows private companies to sell shares to certain investors without going through all the public hoops, usually when it's a smaller group of sophisticated investors. This is often used for private placements or when a company is raising capital from a select few. Let's look at the company itself. Steele Capital Corporation is based in Maryland, and if you're trying to track them down, their main office is in Charlotte, North Carolina. They're identifying as an emerging growth company, which basically means they're a smaller, newer company that gets some easier regulatory treatment, especially when it comes to financial reporting. They've also elected not to use the extended transition period for new or revised financial accounting standards. This tells us they're choosing to keep up with the latest financial accounting standards. This tells us they're choosing to keep up with the latest financial accounting standards. This tells us they're choosing to keep up with the latest financial accounting standards. This tells us they're choosing to keep up with the latest financial reporting rules, which can be a good sign of transparency standards. So what does this all mean for us watching from the outside? This report is a current report, also known as an 8K. These are filed when significant events happen at a company that shareholders should know about. In this case, the significant event is this private sale of stock. It's not a quarterly or annual report filled with deep financial statements and tables. Rather, it's about a specific event. When we look at the lack of specific financial tables in this particular filing, our usual deep dive into revenue, profits, or debt is limited. This 8K focuses on a specific transaction. However, the fact they're selling their own stock privately, even in a relatively small amount like 100,000, while operating under the emerging growth company status, tells us a story about their current phase. Emerging growth companies often use private placements like this to raise capital. They need to grow their operations, develop new products, or expand their market reach. It's a common practice when they're not yet ready or able to tap into the public markets for significant funding. The fact that they are being transparent about it, albeit with details to follow, is a positive. However, the vagueness around the exact number of shares and the price is something to note. While legally permissible under the exemptions they're using, it leaves investors guessing for a bit. It suggests they're still establishing the internal valuations needed to complete these transactions smoothly. This could indicate a few things. Perhaps their stock valuation is going through recent changes, or they're still building out the back office processes that handle these kinds of capital raises. Looking at this from that Warren Buffett lens, he always talks about understanding what a company does and how it makes money. Here the what is that they're a capital corporation, likely involved in investments or financial services. The how they're funding operations or growth is through these private placements. We don't see the usual red flags of wildly inflated revenues or obscured losses because this isn't a financial health report in that sense. Instead, it's a transactional one. The key takeaway is that Steele Capital Corporation is actively managing its capital structure. They are engaging in private equity transactions, which is a vital part of a company's life cycle, especially for those still in their growth phase. The lack of specific figures is a signal that they are navigating the complexities of private finance, and will need to wait for their subsequent filings to see the precise impact on their shareholder structure and per share values. What this filing does tell us is about their strategy for raising funds and their commitment to regulatory compliance, even in their emerging status. They're opting to deal with new accounting standards promptly, which can be a sign of a solid foundation and a forward-looking management team. In conclusion, Steele Creek Capital Corporation is making strategic moves to secure capital through private sales of its stock. While the details are still pending, the company is operating within established exemptions, showcasing a deliberate approach to growth financing. The main risk here is the uncertainty created by the delayed disclosure, share count and price, which could signal internal valuation challenges or less than perfectly streamlined administrative processes. However, their adherence to emerging growth company rules and their choice to adopt new accounting standards promptly are positive indicators of their intent to be transparent and compliant. What's your take on these private stock sales? Do you think it's a smart move for Steele Creek Capital Corporation, or does the delayed information raise any red flags for you? Let us know your thoughts in the comments below. If you found this breakdown helpful, give us a thumbs up and subscribe for more decoded corporate insights. And hey, join our Discord community linked in the description where we chat about these findings and more. Thanks for watching, and we see you in the next one.